If you're planning to invest in Ola's upcoming IPO, then this video surely deserves even more attention. This particular acquisition has brought a lot of bad press for Ola. This deal is marked with too many red flags. This is Prashant from Tech Pluto, and I'm here with yet another story from the world of tech and startups. Ride-hailing major Ola's parent company, ANI Technologies, recently announced that it will be acquiring Avail Finance, a fintech startup that provides loans to blue-collar workers. Ola said that its latest acquisition will help in bolstering its finance vertical, Ola Finance, which is involved in facilitating credits to driver partners and loans for purchasing used cars. Now on paper, this acquisition deal looks rather decent. But actually, even a superficial observation will make it pretty clear that this deal is marked with too many red flags. It appears to be a bad deal for Ola's investors and more so for the company's IPO prospects. Now let's talk about those convincing reasons as to why Ola's latest acquisition makes for a bad business deal. If you're planning to invest in Ola's upcoming IPO, then this video surely deserves even more attention. Well, the most controversial aspect of this deal is that Avail Finance is owned by Ola's co-founder and CEO Bhavish Aggarwal's brother Ankush Aggarwal. But the more critical aspect, and the one that deserves to be noted, is that of late, Avail Finance business has been struggling. The COVID-infused pandemic apparently took a toll on Avail Finance business as the startup struggled to increase its loan book size, impacting their cash flow and operating revenue. According to news sources, company's operating revenue dropped 20% to 4.48 crores in financial year 2021 from 5.59 crores in financial year 1920, while the startup continues to remain a loss-making entity even this present year. The company clocked a loss of 37.2 crores in financial year 21. Well, Avail Finance being a loss-making entity is actually not a big deal, since most of the startups are anyway loss-making. But the bigger question is the fact that Avail Finance lost the appetite and confidence to exist and increase its business as a standalone entity. Did Avail Finance repeated failure to increase its loan book size and customer base depleted its confidence? If the answer to these questions is indeed yes, then this brings us to a critical question. By acquiring Avail Finance, has Bhavish Aggarwal played a brotherly act and saved his brother's drowning business? And by doing so, has he not set an example of bad corporate governance on behalf of Ola? Will Avail Finance add any strategic value to Ola's finance business is essentially a hypothetical question, but there is probably little scope for doubt that this acquisition is by all means a distressed deal for Ola. Although Ola has not disclosed the financial details of the deal yet, Money Control claims that this deal is worth $50 million and will be transacted through share swap deal. If the price quoted by Money Control is indeed correct, then this deal cannot be termed as anything but a distressed sale. To the best of our knowledge, Avail Finance has till date raised close to $40 million through several equity and debt rounds, which is about $10 million less than its quoted sale price. Also, Ola has acquired Avail Finance through a share swap deal. This entails that Ankush Aggarwal will get a stake in Ola's parent company now. It is still not known exactly how much stake Ankush Aggarwal or Avail's investors will get in Ola's parent company. That being said, Ankush Aggarwal getting a stake in Ola is akin to a gift served on a platter, as it's hard to see how Avail Finance is going to bring value to Ola. According to news sources, Ola's investors are not exactly happy about this acquisition deal. However, the identity of investors who expressed their concerns over this deal could not be ascertained. But Money Control claims that some investors expressed their displeasure not only over Avail Finance's weak financial metrics, but also the fact that this deal leads to related party transactions. Over the years, many companies have resorted to related party transactions for pulling off accounting malpractices and even accounting frauds. Not surprisingly, today the term related party transactions has almost become synonymous to financial malpractices. This is not to say that Ola will also resort to such tactics, but at the same time, such a possibility cannot be ruled out. To add to this, Avail Finance was notified by RBI last year for circumventing its rules. The fintech company was found to be giving big ticket loans and using its own money for the same, a privilege that is only granted to NBFCs. It must be noted that till date, RBI has not granted NBFC license to Avail Finance. The latter has submitted its application for NBFC license, but back then RBI rejected it. Avail Finance eventually got away quite easily, as RBI did not impose any heavy penalty on the fintech company. That being said, this fiasco puts a spotlight on Avail Finance corporate governance. Ola's acquisition of this bleeding company, when it is reportedly struggling to raise its own pre-IPO funding, and that too at a lower valuation, isn't a great decision. The ride-hailing major should have rather stayed away from such a controversial deal when investor sentiments aren't exactly positive and they are themselves months away from their much hyped IPO. Well, whatever be the compulsion, this particular acquisition has brought a lot of bad press for Ola, and the timing could not have been worse. It certainly won't be an exaggeration to claim that this deal will have an adverse effect on Ola's upcoming IPO prospects. But its rippling effect could be felt in company's forthcoming fundraising round, which it is seeking to raise at a much lower valuation than their last round. If grapevines are to be believed, then the ride-hailing major has agreed to take a slash, and a bigger one, on its valuation for its pre-IPO round. Ola's agreeing to slash its valuation is somewhere a strong hint that the company's stars aren't glittering bright. After all these arguments and opinions, do you really think that Bhavi should have really pulled off this brotherly act at this moment? Share your opinions in the comments down below as we read and respond to each comment that comes our way. For more news and updates from the world of tech and business, make sure you hit the subscribe button, and yes, hit the bell icon to never miss the next breaking tech story. You can also visit our website techludo.com for reading more tech stories across the globe. This is Prashant signing off. See you in the next one.